Okay, back again. This is Clueless 8. Now we're going to take a look at the chart for the S&P 500. Sticking to the same format, we're going to look at a weekly chart and get a broader perspective of where this market might be heading. I'd like to remind everyone that so far since I have started my premium service on tax day on April 15th, 2014, my general forecasts have been very accurate. I'm not trying to, not trying to basically jinx it, but overall, forecasts that I have and predictions that I put across with a combination of my charts as well as my commentaries as well as my thought process as to the behavioral game theory nature of investing in markets, my accuracy has been uncannily correct. So hopefully I'll continue with that type of that type of work. There's no guarantees in this business. I might just wake up tomorrow and be truly clueless, not just clueless by name. And in that case, you all have to just do the opposite of what I'm saying. So, barring that type of scenario, here is a weekly perspective of the S&P 500. Okay, so here we are on the S&P 500. We're holding the 34 week moving average. I'm sorry, in this case it's a 9 week moving average, very well, and we are seeing that if we that we probably will be taking out the highs at around 1903 on the S&P, and looking at the upper Bollinger here at 1945 before we start a exhaustion. We do the exhaustion run, and what I call the mini euphoria, or the euphoric stage of the market, comes in, which would predicate a sharp drop, probably down here, test this 1865 level again and possibly below. Yet to see. But so far so good. The internals are cooperating with this type of move. We are not overbought in any way or form on the weekly side, and so far, given the seasonality and everything that I've explained very much in detail, I wouldn't be surprised one bit if we see the market get to with the 1944 level by the end of this month, if not by the first part of June. So on a weekly perspective, we are on a go mode here. The automatic green arrow trigger crossover arrow that appears has not appeared yet. The bearish side of the coin would be, like I've explained very much in detail yesterday, is that we break below these lines, these moving averages, the 34, the 22, this dark blue one, and come down to the bottom of the channel, which is 1785, and even then, like we have in previous occasions, would be a great springboard for the market to move up. Now this is all barring any major catastrophe in the global stage, and barring any major credit issues in any specific developed G8 type of nation. Okay, so let's move on now, and that covers the S&P 500. Let's move on now to the Nasdaq. So I'm going to drag that in. Here's a lovely picture of the Nasdaq, and this is where I think the real money is going to be made. I've mentioned this before, and I want to reiterate that, so please listen carefully. Okay, the Nasdaq and the Russell 2000 were the two indices, and of course the biotech index were the three indices which were heavily damaged in the lightning storm that hit us since March 19th. Okay, and that, I believe, would be the space that you want to look into and be selective and see where you could make the money. So on the Nasdaq side, I'm just drawing this out a little bit. This is too wide a channel, so I'm going to try to make it narrower. Okay. I would leave it here for a channel. Take this out. Okay, bingo. Let's focus now. So here we are, and this is a weekly perspective, so you get a better view. You can see here that we are now. It's a green bar. This is the first week that we're seeing that, thanks to the moves on the Googles and the price lines and the Apples, and the Netflixes of the world. So it looks very likely we're going to hit that 4200 mark that I keep on talking about. Once we are above the 4200 mark, we have the wind behind our back on the technology side, then we should be able to close this empty vacuum of a gap towards the upper Bollinger around 4500, and that would basically bring up the apples of the world up towards the 700 $650, $660 level. I've shown that. I'll show that quickly in the other charts. So the Nasdaq is where a very strong opportunity lies. That's where I believe big money can be made. And we clearly saw that today it was a leading indicator, leading index, while the Russell was lagging somewhat, even though it came back very strongly at the end of the day. Let's look at the Russell 2000 quickly. I only have about 3.5 minutes on this stream to cover the Russell, so let me drag it up here. Okay, here's the Russell let me get rid of these lines. Okay, bingo. So here's the Russell 2000. You can do it two ways. You can basically look at this thing and look at it as a nice consolidation flag, okay? I've done this many times and it's worked. I don't see any reason why it shouldn't work this time. I call it the galloping horse pattern. Okay, just made it up. So here we are. If you notice, it looks like a sort of serpent, okay, or a dinosaur or something. Anyway, I don't want to get into that. So here we are. If we cross over the 1125, 1128 mark, we are basically going to move up sharp. We're going to hit the 1158 rather quickly. When the Russell starts moving, it really moves. I don't need to remind anyone. The IWMs and the Russell calls move dramatically. Same thing on the put side, as we all know. I tend to play those and I try to showcase them, and you can clearly see how fast they move. 100-200% type of moves intraday. So here we are with the Russell 2000. I believe that we have an opportunity as it starts to move. This is a weekly doji so far, and once this is resolved to the upside, I think that's what's going to happen. We are going to hit 1145. We're going to hit these lines, cross over, and then I think we have a sharp move. I do not believe in my mind that we are going to hit new highs up here at this 1202 level. I believe that was quite a exaggerated move, but we can still get up here to the 1187 level on a burst, and that's a lot of money. So the two areas you can really benefit in which two very damaged areas you can make a lot of money on: the Russell 2000 and the Nasdaq. So I'm going to move on to the other charts now.